Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, February 22nd, 2025. We got a great show lined up for you. I'm Harvey Freed. He's Harry Glanz.
Good morning. Good morning, everybody. Good morning, everybody in the studio. We'll introduce our guest in a few seconds. Harvey went to the Michigan State game in Ann Arbor last night.
The Michigan game at
the Michigan State game
I see,
in Ann Arbor last night was a phenomenal game. Started out a little slow. Then we started to hit some shots in the second half, and it became academic at the end. A lot of people leaving early, brother.
They pulled away a little bit there, but definitely close game. The lead changed and everything.
It was very nice to see the atmosphere. It's great there. I'm glad they're showing out for their team. They're showing up, and it was great. A lot of fun, great atmosphere, and another couple weeks ago to Breslin. We'll see what happens there.
Well, we love talking sports, but of course we handle mortgages and real estate, and we brought in a couple special guests today. Missy Rudin. Hey, Missy, what's shaking?
Hey, how is everybody
And
today?
Shelly Dettore, National Realty. You guys are representing National Realty today, so tell Craig we got you all covered today.
Good morning, Harvey. Thanks for having us.
All right, thanks for coming in. We really appreciate it. Of course, the show starts now 8 to 9 in the morning, 1 hour of mortgage real estate talk. Then we get into sports all afternoon. I'm sure there's a whole bunch of sports later today.
A lot of stuff going on.
Stuff.
There's so many things going on. Spring training. Listen, Tigers are back. Already talking NFL draft. Harvey, Pistons and Wings are coming on. I don't know if you caught the hockey over the weekend or last week, Harvey. You were on vacation.
It was great.
How was your vacation?
It was nice. Yeah, it was nice to
glad.
get. I miss Harry. Maybe I'm the smartest mortgage guy. Maybe I'm not, but
no, you're not.
I'm definitely not. But definitely, I got out of town. I booked this vacation and missed three snowstorms here and about 8 inches of snow. But it was waiting for me when I got home.
Becky's on vacation now, much deserved vacation like you did. And it'll be great. But we have two great guests. We're going to talk about what's going on in the market like we usually do, the real estate and the mortgage market. And speaking of markets, Harvey, I don't know if you took a look at the stock market yesterday.
It didn't do so well, did it?
No, it took a dump, about 800 points. It's down a little bit. Everybody's worried about inflation. Everybody's worried about the tariffs. Everybody's worried about certain things that, in the financial markets, rumor and speculation and innuendo rule the day. So if people think things are good, things are good. Perceptions, things are good. It's fine. But if people think certain things are going to hit their pocketbook, all of a sudden they start doing some crazy things like taking money out of the market and moving it around. How does that affect mortgage rates and real estate? That's really what we're here for. It affects mortgage rates because inflation dictates what mortgage rates are. Nothing else does. It doesn't matter because, as you ladies are going to tell everybody, the market is still really hot out there. Not enough homes on the market, driving prices up. And Missy, we said it earlier on when we came in, people are over the rate thing, right?
Absolutely. I think people are coming off the sidelines and starting to buy again. People that were waiting for the rates to go down, at least.
But they're not going to go down significantly.
No.
If they go down, it might be a quarter point here. Then the Fed meets in the middle of March. We're going to talk about it. No meeting in February. Didn't do anything in January. We're going to see a little bit of that. And when we talked about that this year, probably in real estate and mortgages, is going to be a little bit of a copycat of last year, of 2024. So 25 in real estate's looking like 24. But that means there's still a lot of activity out there.
Absolutely. Last year, once we hit March, we had a steady flow of homes that were on the market, the same multiple offer situations, and I expect the same this year.
And some sellers' concessions, we're still getting them. How about this small window of opportunity left? Is there another 30 days where we can push those buyers that have been on the sidelines? Is that an opportunity still before, again, we talk about housing affordability, and we'll talk about that this morning. But is there this still window of opportunity where homes are on the market for 3 to 4 weeks, the price is going to drop, and they're looking for a deal?
I mean, I kind of think so. I think, you have about a month time. All those houses that have been sitting for a while, you have that opportunity. And as a buyer, your negotiating power is there.
But as we talk about it, okay, if we have a little bit of an opportunity now and people are waiting, which I can't believe people wait. It makes no sense. Because if you're waiting, that means more people are going to come into the market. You're going to have more competition to go ahead and for those 4 or 5 houses that might come on the market, hit Zillow or hit the MLS, right like that. And people are going to be on them really quickly. So we're seeing prices, everybody out there, prices are going to continue to go up.
Yes.
Okay.
That's a consistent thing right now.
And when you wait, the house that you could have bought for, just give me a number, $300,000 last year is now $330,000.
Absolutely.
And if you wait again, it's going to be higher next year because we don't see, and again, we're not predicting anything. It's just trending in the way of not a significant amount of new homes are going to come on the market. So that'll drive the price upward again. So you got to get in now. Rates will come down. I can't tell you. Anybody who tells you they know when they're going to come down, run away from them. We think that they're going to go, they're going to start sliding a little bit. But when I say a little bit, quarter point maybe, we'll see. I hope I'm wrong. I hope they go way down, of course.
Real tough for all these renters out there, too, because they're getting crushed with the rent. Those are not going down any. And it's hard to save money. So the affordability factor is definitely creeping up on everybody. And folks, if you can get out there now, again, a lot of down payment assistance programs. We'll dive into that a little bit this morning. But also co-signers or feeling the whole situation with your personal situation. Harry talked about the stock market. We have seen families, and we don't want you to use your 401k as a piggy bank, but some families do need that extra money to get that offer accepted. And again, now you start paying yourself. If you got the ownership, you can build equity. Without the ownership, you're throwing a lot of money away each month.
But if you're borrowing from yourself out of your 401k,
there you go.
Okay, you're borrowing from yourself and then you're paying yourself back. It's never a bad idea.
It's not the worst idea at all.
It's never a bad idea, and it happens, and you could use that as a tool. But again, we don't encourage that. We just say that is another avenue that you could go down. And Harvey said about co-signers, they're really co-borrowers because it's not, they are obligated equally on that promissory note. So when you sign for your kid on a mortgage, you are not 50% responsible. You are 100% responsible because we don't care where the money comes from every month when you make the payment. We just know that you are 100% responsible when your name is on that note. So everybody they have to realize that that's a huge responsibility.
And I've come across many clients in the last 2 years especially who are borrowing against their 401k. I think for affordability and cash on hand, they need that. And again, you're paying yourself back as a result.
Yeah.
Not a bad idea.
No, it's a really, really good idea.
All right, let's start the morning off with some calls. We'll take your calls at 248-539-9797. Bob, you're calling in from Clinton Township. Good morning.
Good morning. How are you doing?
Real
Morning,
good, sir.
Bob.
Yeah, the reason why I'm calling is I was thinking either early summer or late spring or whatever. I was thinking of buying a house, but I didn't want to sell mine right away. So I was thinking of, like, let's say, for instance, putting $300,000 down and say the home value is $600,000, so pay half, and then take the other $300,000 that I owe, either a bridge loan or a conventional mortgage, and then about a month or 2 months later, hold on a second, please.
Good morning. I'll take it for you.
Yeah, can I have a medium coffee?
Hey, give me an extra hot venti latte while you're there. Don't you love this?
And it's
Go ahead, Bob.
a black one. I'm sorry. That's it, Darren. Thank you.
You never know
Sorry
what you're going to
about
get
that.
when you're live on the radio, Thanks, Bob.
Yeah, I know. I apologize.
Yeah, go ahead.
But Bob, I like this idea. You got a lot of equity in the home you're considering selling. There's a lot of equity there, so maybe you want to purchase the new one first.
Yeah, it's paid off. So, like I said, I'm realistically, I just want to put, I'm doing this on the slide. My wife don't even know.
Well,
So
that's
I
always a
wanna
good
spring this
strategy.
on. Yeah, well, it isn't really. But I wanted to know if the ideas in my head of doing this, putting down $300, my house is paid off, buying a house that's around $600, and my house right now is valued at, I'm going to say, $350 to $400. So would that be a good move by just getting a bridge loan or a conventional
Bob,
mortgage?
It's always a great move if you've got a need. Again, a lot of families are looking at downsizing as we're getting closer to retirement and things of that nature. And here you're going the other way with it. You're looking to enjoy your life and maybe buy a bigger home. Maybe you've got a larger family. Your questions are where we need to call you off the air and find out a little bit more. Again, not what kind of coffee you like. We're going to find out a little bit more about when you want to set up the timing on all this. And we definitely encourage in a marriage situation, Harry, because these real estate agents become really psychologists, psychiatrists. And I think if you just start throwing it out there and getting more questions answered, you can really do this the right way.
Yeah, we'll go ahead.
right,
We'll go
so,
ahead and we'll give you a call, but we'll have a plan for you. We'll map it out, and we'll see where it goes from there. But I think that at least the thought process and you starting to plan it out, I think that's really going to help your situation, and we'll have something for you, and we'll give you some options. That's just the best way to go. We'll give you options.
There's definitely a few options for you.
And I like the fact that he even took the energy to call in this morning. So we get different calls here at 8 to 9 in the morning. This isn't just rushing to work. This is even the coffee crowd, which is great.
People are listening in their car, and you know what? Next time, I want somebody to drop off a latte here at the office. At the station, we got it 4. We'll give you an order on the way in. No problem.
For sure. 248-539-9797. Take your calls all morning long. Of course, Missy and Shelly join us from National Realty. If you'd like to call in, they're going to be calling, reaching out to this guy definitely to see. And one of the things is right there, it's just that initial phone call, and I think that's where it all starts. So you guys get these all the time,
Absolutely.
and now you're going to go to the house. Now you're going to do the market analysis on the house. So give us a little bit of that, even how you'd even go about approaching this client.
I mean, first off, it sounds like he wants to buy before he sells, obviously. So, it would be setting him up on a search, getting the right house to him, and then working backwards after he's under contract, and then finding out, like you said, what his house is actually worth and doing evaluation there.
It's going to definitely net a lot more money from the sale of his house come 2025. But now he's looking at, again, if you're not downsizing, you're spending even more money. So a little bit going the other way, which is a little interesting. I'm not saying he sounded old or anything like that. I'm just saying potentially. Hey, I'm just saying potentially.
Be careful with the older thing.
Yeah, I'm getting there too.
So Shelly and Missy, don't we do it that way? Don't we? And you hit the nail on the head, and you said the word that. Don't you start planning from the goal aspect, then backwards? Don't you find out what somebody's goals and objectives are, and then you work backwards on that, right?
Sure.
And you see, exactly. And that's what we do when we're setting up somebody for a mortgage. When somebody calls us, you guys get the calls. You get the signed calls. You get the people calling you. I want to go see this house, right? Well, they think that's the beginning. You got to work backwards. What do you mean you want to see the house? Are you qualified?
Right.
Do you so before you show somebody a house, you have to make sure that they work backwards and that they're qualified, right? And then take me through it. I get a call. I'm Harry the Stranger, and I'm going to call you. And Miss, I saw this house on Orchard Lake, and I want to buy it.
I would say, great. Have you talked to a lender? Do you know what you're qualified for? Have you even started that process at all? Do you know somebody? If not, let me introduce you to somebody. I have a few that I like and trust. And then make that introduction, and then we together will, get them qualified, and then get them out looking for homes.
Even if you know somebody, even if they're not a stranger, Harry the Stranger, it can be really strange, let me tell you. You're not going to go waste your time unless you know that they're qualified. So you have to work backwards.
Absolutely.
You know what? We're up against our first break. When we come back, we're going to dive all into that. Is what a true pre-approval is. Who are you? Vetting the person properly.
Where's the money coming from?
All the good stuff so that these real estate agents can close in 30 days and not have all the stress. 248-539-9797. We'll be right back. Alrighty, welcome back to the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. We are powered by CMG Home Loans, NMLS 1820 Equal Housing Lender. Call us at Capital Mortgage at 1-800-LOW-RATE, the best mortgage banker. Always get you hooked up with the right people and the right program. That's the key. You know, I pulled out an old book that we used to give out families here. This goes back 20 years. It looks like it's brand new as I've been cleaning my office out trying to get organized. We used to give this to clients. And I showed you guys this. This is really cool. It came out from PMI, Private Mortgage Insurance, of course. And it's all about being a successful homeowner. You guys, I know you just got in the real estate business, a lot of families out there. This stuff, Harry, is really the same thing that's going on now, 25 years ago till today.
Yeah, but it's not a one-size-fits-all. Okay, you have to design a program. It's like when you buy a house. I mean, everybody doesn't move into the same kind of house. So a mortgage is the same thing. Everybody wants to know what's an adjustable rate mortgage. Do I do a 20-year? Do I do a 30-year? Do I do a it's really, we have to sit down. Before the break, we talked about doing things from, the backwards first. Well, when we say backwards, we don't mean backwards in a negative way. We mean, how are we going to end up there, and then going forward to find out how we're going to end up there. So when we do a mortgage for somebody, we sit down with them, we plan, we talk about a lot of things. We talk about credit, we talk about income, we talk about where is the money coming from, because people don't want to address where the money's coming from, because that's an uncomfortable situation when we have to talk about money. Anytime you talk about money with somebody, it's uncomfortable. It shouldn't be. If Missy is going to take me to buy a house, she has to know, do I have the money to pay for the house? And where am I getting it? Well, okay, I'm going to put 20% down. Where is that money coming from? Am I getting a gift? Where's it coming from? Is it in my mattress? Is it in a bank? What bank is it in? You have to talk about the money first, and then you go backwards into, now let's go look at a house.
We talked about those pre-approval letters all the time, guys. It's just not a piece of paper. It's got a lender's name and a phone number on there. And I think if you're working with a buyer and you get that immediately, you're reaching out to say, hey, Sally, Joe, you signed this pre-approval letter. Let's discuss these things. And if they're not even answering the phone, then it's already the worse sign. If it's an out-of-state lender, usually even a worser sign. So is worser a word? Worser a word.
Wow.
So the key is to definitely really contact the people, break it all down. And you guys, is it uncomfortable? Or is it more uncomfortable when you find out, and we've had those calls, Missy, you've called me and said, Harvey, this is what's going on with this family. How are they going to, and I'm like, well, they don't qualify.
Right.
So, tell us a little bit about that.
If you find out after the fact, after you're already under contract on a property, that's the worst thing. So, you want to make sure that I feel like the lenders that I work with, we're partners, we're a team, and you have to build a good team. So right when you're getting that approval letter, you're reaching out and saying, hey, what does this person qualify for? Is there going to be any obstacles? What do I need to be aware of?
But don't you get that feeling, ladies, don't you get that feeling when you're working with somebody? You know how they say, you think with your head, but your heart and your gut tells you what's going on. Don't you know? Don't you get a feeling? And then you call your lender partner and say, hey, listen, I've got a bad feeling here.
Yeah, especially like if it's a client that you don't know. When you go to write the offer, I've had instances where I look at the pre-approval, I'm not familiar with the lender. Hey, it's expired. So, you kind of get an idea of, who's a solid buyer and who isn't.
So this is why we have to do that first.
Yes.
Right? So that's why we have to do it first, to avoid that bad feeling. And you know what? We can all be wrong, and that's why we just let the numbers dictate what we do, all right? We have a formula. There are certain things we have to go by. Credit scores have made things easier but harder for people. They made it easier to decide and harder because there are certain scores where you get better rates and you qualify for more and DPA and things of that nature. I'm not getting into that nerd talk right now. That's nerd mortgage talk, really. But we have to have these guidelines. We have to follow certain guidelines. Are there things that we can do because we've been around a long time, but within the guidelines? Of course, because we know what we need to do to navigate. But we have to have all the information from the back to the front. And we usually start with, where is the money coming from, Harvey? Where's the money coming from?
Most important thing. Let me go into this. I like that as we talk about more pre-approvals and stuff. I want to talk about buying power. As we got a lot of these buyers, and we talked about a condominium you recently sold. And
correct.
It was in Waterford. I'm a Waterford guy off of Cass Lake, and you were around Williams Lake. And the price range was just over $200. And the associations have been really under a lot of stress because they haven't budgeted properly for a number of years. Again, typically a condominium association or even a homeowners association are the residents in there. So it could be a homemaker, it could be someone who's a full-time lawyer, and this is sort of a part-time thing. It's a thankless job, that's for sure. But one of the things we're finding out is that these association fees are starting to really go up, and all that buying power. So that condo that you sold, do you recall what the the association fee was? I'm just curious.
So the HOA was running around $377 a month, and that basically included the maintenance on the outside. There were no parks, tennis courts, pools, anything like that. No utilities were included at all, but you did have water and sewage.
Okay, so that's not bad. Something was included.
Yeah, and the average HOA right now for condos in Michigan are running between 200 and 300. I particularly, as an agent, see them between 300 and 400.
Yeah. What about snow plowing and
Yeah,
grass?
so
and
all
those
outdoor
things?
maintenance
All
are included.
Good.
But the hitch with HOAs too is then you're also looking at the possibility of assessments.
Right, future assessments for
There's-
maybe the whole roof
yeah.
or something of that nature.
Yeah.
Or putting in the brand new furnaces and all the units or something of that. Whatever the HOA is responsible for,
And you have
could be
to
on the hook.
review. You have to review your condo association master deed and bylaws
And
because
even financials.
and the financials, because on our end we have to review that. And as a homeowner, let's say in a condo association, if you live in a condo that has like 25 condo associations, 25, and let's say 6 of them need a new roof, you know what they're going to do? They're going to put new roofs on all of them. They're not just going to put on the 6. So you're responsible for that. And then people will say, well, I don't need it. But that's not what it says in your master deed and bylaws.
Yeah.
It says that you have to come up with the money to go ahead and you need to pay that.
It's a community fee.
That's
and
no question.
You give me a building 26 and they're starting in building 1 and it takes 3 to 4 years for that to happen. But in the meantime, you're paying that $10,000 assessment now.
Right.
And then if you go to sell, then you've paid it and you've never even had your roof finished. There's a lot of things to consider when you're going to a condominium, especially if you've never experienced one before. Because what I'm experiencing is a lot of people who own homes right now that are older in years, they are looking for something along the lines of a condominium. And I'm very specific when I explain to them the pros and cons of a condominium and HOAs.
And of course, on the seller side, even more importantly, when you're reaching out to the seller, how important it is to have all that documentation ready. So what the families are looking for is who's the president of the association, who's the treasurer, are these people approachable? Can somebody I can call? Can I get the minutes of the last couple meetings and check out those actual numbers, the budget, and the things you guys are really talking about these condos. So I broke it down a little further, and I'm glad you said closer to 400. $400 an association fee is roughly, at today's interest rates, whether it be somewhere between 6.5% and 7%, is about $60,000 in buying power. So if you got a client out there who's looking at condos around 215, that would probably be about a home purchase of about $275.
Yes.
I've always felt like, again, everyone's situation is different. Condo living's great for so many folks, but I still like that idea of first-time home buyers looking at that house. Miss, definitely, we always urge that. We like, well, they can't look at a condo. Their budget's $225. They can't look at a $400 or a $300 association fee.
Right, because their buying power is so diminished there.
Yeah.
So, I mean, it definitely makes sense to buy the single-family home versus the condo. But like Shelly said, there's pros and cons.
Yeah, again, everybody's different. It's not a one-size-fits-all, but you have to weigh it out. You have to draw, your pros and cons out, draw it on a piece of paper, and list them. If it checks the majority of the boxes that you're looking for your lifestyle. And it's a lifestyle move.
Absolutely.
There's no question. It's a lifestyle move. Sure. And you have to decide. So
I came back from vacation here, and it took me 3 days to pull all that snow off the roof, off the backyard. So yeah, I mean, I was hoping for some association, but again, it's not really expensive. I choose to do it myself, have a snowblower and some items that I can, I have the tools. But it'd be nice to have a company if you wanted to go ahead. If you're a homeowner, you can have a company, probably $500-$600, can handle all the snow removal for your house all season long. And again, typically that landscape company is the same company that would cut your lawn, and it's not outrageous. So really key is to sit down with your real estate agent. I want to focus on that as a first-time buyer, whatever's going through your head if you're listening, and find out what your lifestyle is and truly what your goals are.
Yeah, and the cost of those things that you just spoke of, the lawn care, the snow maintenance, it is rising. I mean,
exactly. Everything's going up.
And if you're older and you find yourself, you're in the retirement years, you're on your fixed income, when you feel like you're being sort of nickeled and dimed to death on the maintenance items, that's when they start to look at condos.
Yeah, that's a really good point. And it is a lifestyle move. And if you don't want to cut your own lawn, do your own snow blowing and take care of the house, the roof, the gutters, everything that comes with home ownership. Listen, home ownership's great. I recommend it. It's for tens of thousands of years. All right, I'm going to go back. If you own your own house,
Yes.
it creates generational wealth. Because right now, if you go back to the 30s, 40s, 50s, 60s, houses did not go down in value. All right, they're a blip here and there, but over time, if you're looking at the long haul, the big picture, all right, and you stay in a house, chances are you're going to be able to sell that house for way more than what you bought it for.
Yeah, just a couple other things to consider, of course. What are those routine fees? There's a lot of them. If you go to a condominium project, and again, they're all different. There might be a hallway, elevators. We mentioned water could be included, heating, garbage collection. There's just so many variables. Get with a qualified real estate agent. They'll hook you up with great qualified lenders. And we're up against our second break. 826, if you're just joining us, it's the Hardcore Mortgage Real Estate Business Show. Give us a call, 248-539-9797. We'll be right back. .30. Pretty sunny day out here this morning. Harry, not bad. We got a lot of sports coming up. Keep it here on 97.1 The Tickle. Be sports following our show all day long. Starts at 9 o'clock with Pat Caputo, and Mark Ryan will be following him, I believe. We'll get into that later.
Going into the last week of February, Harvey, coming into March 1, we think things are going to start kicking it off a little bit as the weather. It always happens here where we are. We're going to get one more cold blast, right?
One more ice storm, one more something bad.
Yeah. And then we roll right into spring training, exhibition games start, Harv. And then always, baseball season springtime brings baseball season, Harv.
Melissa Rudin.
And
of
home
cour-
buying.
Yes, and home buying. Melissa Rudin, of course, here this morning with Shelly Dettore, National Realty. They came in to share some of their expertise, what's going on in the industry. And we don't want to go anywhere too negative with it, but yeah, we talked about pre-approvals, and we constantly talk about that because if you're out there and you're clicking buttons and they're just calling up the real estate agent and they really don't want to show you the home unless you've got something behind you. A couple things you can do if you're a cash buyer, if you're a very strong buyer, and you can immediately tell them, okay, then refer me somebody. If you refer me, Missy, as you know, you can refer me this afternoon. Likely I can run the file through the program, ask all the questions, verify some documentation, and they can really be a strong buyer. And it can happen rather in a couple hours.
Right. Right. And that's one of the things that I love about working with you guys because it is so quick. Because I feel like buyers now feel like the time is of the essence. They see something that they want and they know that if I don't get it today, then it may not be there tomorrow. Right. So, being able to have a quick pre-qualification is good.
How about Shelly and Missy? That is the market today. That is the market. If you don't react, speed to respond is quick on your end, on our end, on buyer's ends.
Yeah.
So when you want to move quickly, we can do it, but we need certain information.
Absolutely. I mean, that's one of the things when you sit down and meet a client for the first time in that initial conversation. That's why a buyer's meeting is always a great idea. Get your plan together, put all your things in motion before we get out there, because I really have to explain to them, I need proof of funds, I need a pre-approval, because we're talking about things where multiple offers are coming in, or not even multiple offers, but where things are moving much faster than what they used to.
No question about it.
We always talk about different things you can do. I brought this up a few weeks ago before I went away, and I was just talking about things to prepare yourself. And if you're thinking about becoming a homeowner this spring or summer, definitely you want to reach out to a lender right away. Call Capital Mortgage Funding. You can get in touch with us directly, 1-800-LOW-RATE. Keep it easy. There's no upfront hostage money. There's no obligation. Start really building your knowledge up so that way we can direct you to some of the great agents that are out there. Let's move on to Rick's calling in from my hometown, Waterford. Hey, Rick, what's going on?
Good morning, everybody. How are we?
Real
Good
good,
morning,
Rick.
Rick.
Thank
How are
you.
you?
Hey, I have a brief question. So, not to call out a mortgage company, but I've been in my home. I signed a 30-year mortgage. I've been in there for 10 years, and they want me to refi, stating I have like $120 or $1,020 worth of equity. Sorry, I'm making a left-hand turn, driving and talking. That's the wrong thing to do. In short, how can I drop PMI insurance in lieu of refinancing?
Yeah, I got a couple great ideas for you. The first one would be to contact the servicer of the loan. Again, it might not be the person you originally started the transaction with. Maybe they've sold it to one of their servicing partners, but that's the key. That's
Correct,
the first
which
call.
they did. Yep.
Okay.
Alrighty.
I would reach out to them and ask what their criteria would be. And then you sort of hint to them that you're thinking about refinancing it, but you don't want to lose them because you really like them. And there's a couple things that you can say. And I would just reach out to them and find out what their criteria is. They might look at the numbers immediately and just be willing to drop it. They don't want you to refinance. They don't want to lose you as a client. You're obviously paying monthly. They're making a little bit of interest on you, depending upon what your interest rate is. And the key is, if they want to stick with you and you're just looking to drop that, like you said, maybe $100, $120 PMI, maybe there's a small fee. Maybe they want to do a drive-by appraisal here. These are just a couple things I'm mentioning.
Yeah.
So a couple things that they might require.
Yeah, Rick, I would call them and I would tell them exactly what you said. Hey, this is Rick. I've been in my house 10 years. My house is worth X. I'm still paying MI, and I want to drop. What are your suggestions? That's number one. Number two.
Fair enough.
I'm hoping your rate is lower than the current market rate right now. Correct?
I'm at 4.25.
Okay, so you just want to do that. So then I would suggest that you call them and do that. But, make sure that you talk to them succinctly and say, hey, listen, my original loan balance was X. My current loan balance is Y. I don't need to pay this MI anymore. All right. Now, they could do a drive-by appraisal. They could just say, okay, they could just look you up and say, hey, you're right. Your property is this, and they might drop it. But if you have any questions about the process, give us a call. We'll walk you through it, and we'll make sure that somehow, some way that MI gets dropped for it.
That's a great call. Thanks a lot, Rick. And I hope they remove that PMI for you, or MIP on an FHA loan. And sometimes you have to refinance out of it if it was an FHA loan that didn't fit the criteria of the MIP being dropped at a certain LTV, loan to value. I don't want to get too technical here. That means how much equity you have in the house.
He's definitely a candidate for go ahead. Somebody's going to call. They don't want to lose the loan. They're not going to make him continue to pay that MI.
No,
now there's other things involved. He's had to be on time with all his payments. There can't be any liens on the property, all those kind of things. And we'll get into that with him. We'll help him out with that. But his first call should be to whoever he's making that payment to.
All right, go into some fun stuff with me, guys. You're both sports moms. So we got Melissa over here. Missy's, of course, a hockey mom. The kids have played hockey their whole lives and in college. And now, Shelly, you got the whole thing going on again. You're a football mom.
Congratulations to your son. That's great.
And
Thank you.
Great move.
How great is that? And just think about that. It's funny because, your kids go to school. It's so important that school fits your lifestyle. And that has to do with home ownership. If you're thinking about going to a private school, how close are you going to be to the proximity of that school? Was a school like CC moved up, a few years back? Of course, they were in Redford forever and then moved out to Nova. It just makes it easier.
Yeah.
But we do here, I've got a lot of clients over the years. I'm like, you drive 30 minutes every day to, take your kid to wherever, St. Mary's or wherever it might be. But how important is that location and really breaking that down with their family and what the goals are?
Exactly. So you're talking about where you're going to raise your family at, and how do you feel about the school system? Maybe you're doing public schools, so you're not driving them, or are you going to use, outside of the system schools, it's the Catholic schools. So map out where you think you're going to be in a couple of years, because a lot of times I'll have clients and their kids are just little and they're not even going into kindergarten yet, and I tell them these are the things to consider: your location of where you're working, the location of where the schools are, how are the schools rating. So those are all conversations that I have with my families before we go out and start looking.
Might have a kid who's really talented, a real smart kid who's going to the academy, International Academy, or whatever they're going in. And if it's, you're thinking about moving over here, it's going to be difficult. And it's hard to keep a little bit different with relationships, even as kids are building their relationships in schools. Now, of course, I threw in there the sports because we're on a sports station there, but also that plays into it. If you're, you have a child who's a hockey player, well, maybe the private school like St. Mary's, where they have their own hockey arena, that makes more sense for you. So
but I would tell you this for the masses, Harvey. Let's do the masses.
Let's
do the masses, okay? Let's talk about the masses. That school districts are still number one priority for families on where they're going to live. Is it a good public school system, right? And we are lucky in metropolitan Detroit compared to other places in the country that our school systems here in our area are way above average. I mean, I could tell you other stories.
For sure,
I don't want to call it other states, Florida. But, but our public schools here are very good. And the services also. The services that we have here in our state are second to none as well. So when you go ahead, and there was a study done, if you took a look at it, it was all over the internet last couple of weeks. It shows that in the Midwest, I mean, listen, we have very few natural disasters, right? We have the Great Lakes here, which is our water source. We have, the weather patterns here are, you wouldn't know it lately, but are way better than, look, I don't have to tell you what's going on out west, other places in the Northeast, but we have a very stable way of life here, and our quality of life here is very good. And believe it or not, our cost of living here compared to other places is lower. I'm not going to say low, it's lower. For the services that we get are pretty good. So, all in all, I think we sit in a very good situation. So we're looking to buy a home, specifically in our area. School districts, schools for our kids are the number one priority when people are looking for.
And there's a lot of great choices. Well said.
They're great.
Very much so. And I mean, I chose a different school, a different path,
Yeah.
but not because of the lack of great school districts out there.
And again, it's not a one size fits all. Your intentions have to be specific when you're looking to put people in a house in certain areas, and it's wonderful. We have a lot of options here, a lot of options.
All right, sort of segues into some other things when you're calculating the numbers, your lifestyle. What are you thinking? Again, are you going to send your kids to private school? Is public school a route that you're going to take? But when determining your housing budget, the other things come into play as the property taxes. Homeowners insurance, we've seen a huge increase here. We talked about some natural disasters we see across the country. On the other side, who's going to be paying for that? I mean, definitely we've seen the insurance costs go up. But a lot of times, and we'll just touch on it a little bit as we're going to have some property tax experts coming in a few weeks. But just talk about it a little bit. If the homeowner, you're buying the house, Miss, your client's buying that house. Yep. And the homeowners lived there for 20 years. I'm sorry, grandma's she's going to the next nursing home or whatever she's moving out. She's going to move in with the kids. whatever that situation is, those taxes are going to be reassessed. That's why it's so important. You know, we have the knowledge. We break it down right there. But we've seen property taxes go up from, let's say, $2,500, $3,000 to $8,000, $9,000, triple what they were when the family bought it. And it becomes an issue.
I just had a client who called the other day, and her tax is uncapped for 25, and the person that she bought from purchased in 2012. So it went up 50%.
That's huge.
Yeah.
It was. I mean, she called me in a panic, and the thing that you have to realize, I mean, it's the good news, bad news. Good news is that your house is now appraised for higher. You have a higher home value. But the bad news is now you're taking
You have to pay
taxes.
taxes. And those notices came out within the last couple of weeks. Everybody got their notice, and it shows what their tax, their state. It shows the state equalized value and what the taxable value is. That's two different things. And normally the SEV is going to come in a little bit higher, and your taxes actually, believe it or not, are going to be lower than the real value of your house.
Right.
So everybody doesn't understand that. We'll walk you through it. So give us a call.
All right, 248-539-9797. Keep it here. We'll be right back. Hey, we are back live here. It's 97.1 The Ticket, the Hardcore Mortgage Real Estate Business Show. Thanks for joining us. Again, we're in our 25th year of trying to bring you some great information.
We got Paul Serra producing our show.
Yeah, we got the real Paul Serra. We got great people.
He's running great music today. Look at him. He's
Keep
working
here all day
He's
for
working back
sports.
there taking calls for us.
In our last segment, if you want to talk about sports, we will do that. We got a couple sports moms in here, and they know more about sports than most of us, anyways.
I have to shout out to the entire OLSM football team, state champions.
There you go. Look at you.
2025.
Look
My
at you.
son was one of the captains, and I'm super proud of him and all of the boys on the team.
That's
They
Division
had a
two.
great season. Yeah, they had a great season there.
I think they were
That's
11
wonderful.
and 3.
We
Yeah.
love it.
Yeah.
Good.
I like the way, and again, I was into sports and I played high school ball and stuff like that, and it just really creates men. It creates great people, women too. Creates great relationships, great long-term relationships, gives you an opportunity maybe to get a few dollars to go to college and get your college
Exactly.
paid for.
Yeah.
But also just the great experience of that, what it is to be a teammate, be disciplined. I love all the morals about sports. So I'm still back into it. As I
but the
mentioned.
number one thing about high school sports,
Coach Harry.
you have to get good grades. Okay, it's a way of, through sports and discipline, you can become pretty good academically.
Absolutely.
And you use academics to go ahead, and it's everything. It's all about using sports to be good academically, and then moving on to, if you go to college, if you're lucky enough to go to college and get a college degree, and then you go back as you get into business and you grow, you reflect on the teamwork, the camaraderie, the sportsmanship, all the things you need to compete. So as a coach, I'm just telling you, you just got to be able to compete, because if you can compete, you've got 80% of the people that aren't going to work hard.
Exactly.
Right?
And life's not easy. I mean, even getting into med
hard-
school now, you might have the best grades in the world. It's difficult to get into medical
Hard
school. Just
work.
everything's tough in life.
Yeah.
You better be working your butt off.
Hard work beats talent when talent doesn't work hard.
Yeah, I
Okay.
definitely see a
That's it.
really strong work ethic in my son that plays sports.
Yeah.
He's has a car detailing company, and he works at Gino's Pizzeria in Kego Harbor, and he
Who's this boy? Yeah, man.
Yeah.
Shout out.
He-
We're doing commercials for everybody.
Well,
Harv.
and-
Pumping them up.
Well, and then also too, I use the boys from the football team. They help me with my real estate.
Good.
Believe it or not, because one of the services that I offer when I am doing a listing is, hey, do you need a light clean out? Because a lot of times these clients will call in. I'll talk with them, and they're like, yeah, I want to sell, but I'm so overwhelmed. I have all this stuff in my basement, especially, again, going back to the aging group.
Yes.
And just going in there, with 4 or 5 boys, hey, need some community service hours.
you go.
They're so great, and they're so respectful, and they're so happy to help these people out and me. And then,
helped me
and they've
out,
helped.
too.
I've sent them.
Yeah, they make a
I've-
$5. I love that.
Yeah.
Yeah, exactly. Another tool in your toolbox if you're a real estate
Absolutely.
agent to have, hey, look, we got some young kids here. They're willing to work. We can pay them a little bit of money, and they're going to clean out your 30, 40 years worth, maybe even longer, worth of stuff in your basement. And that's one of the things about decluttering a home. I want to real fast talk about a quick good story. About 5 or 6 years ago, I did a Mishta loan purchase for someone here actually connected to the radio station. And just recently, we're dropping him. So we got this 30-year mortgage. He took the $10,000 Mishta money. We're refinancing him. He's dropping 5 years off his mortgage, going to a 20-year. It covers everything. He got rid of his cosigner. It was a girlfriend again. Things changed in life. And I did the numbers, and what a great opportunity. It's so reachable for families if you just do it. And this was someone, again, starter home. Harvey, I've listened to your show, and he'd worked at the station for a little while here, and we just totally hooked him up. And now we're doing that refinance, and time just flies by. And, Miss, we could talk about some of the buyers we worked with just 4 or 5 years ago. Even one of our first transactions, he's now considering selling the house. He's got like $120,000 in equity and just moving his family into another house. I love those great stories.
Yeah.
Yeah, Missy, that's why we opened the show. We talked about rates. And rates, I'm going to say this to you, and in a broad sense, rates are irrelevant, because what we have here is a situation where people have credit card debt. They've amassed credit card debt, and refinancing out of a 22% interest rate on credit card debt, if you have to give up your 4.5% interest rate on your house to take a 6 3/4, 7.25% rate, okay, and trade that in and take that as opposed to 22% on your credit cards, what would you do? So rate, it doesn't matter if you're paying 22% on a credit card. Go ahead, take the cash. Again, not using your house as a piggy bank as a general rule, but if you've built up equity after 5 years and you have credit card debt and your payments are outrageous, all right, and you can lower your payment on a monthly basis, what does it matter if you're at 6 3/4, 7%?
Yeah, I totally agree. I just had a young family that bought a condo probably 5, 6 years ago. They ended up trading that up, and they bought a $500,000 house with that equity. So it's like I keep telling my young buyers who are kind of sidelining themselves, get into a house now, because the same house that you want now is going to be $30,000, $40,000, $50,000, $60,000 more if you wait. And then you have that opportunity to start building equity so you can trade it up in a couple of years. It doesn't have to be the perfect house. It just has to be in a good neighborhood where it's going to appreciate.
Yeah, no question. And that's what it's doing. And real estate over time, long haul, will appreciate over the long haul. You can't go ahead and do it as a snapshot in time and say, well, Harry, look what happened in 2006, 2007, 2008. That was an aberration. If you take a look at 50 years, and I know we say this every week, nobody cares what happened 40, 50, 30 years ago. They only care about now. But you have to learn from history. You have to take a look at it. And things over time appreciate. The house that your grandmother bought in 1966 for $17,000, that your parents bought in 1985 for
65,
whatever, is now worth $250,000.
A lot more than that, even. Yeah.
So
I
I'm
would say
just
350.
exactly. That's what it's worth, and that doesn't happen by accident. It happens over time.
All right, 248-539-9797. Got a few minutes left here. If you want to join the show, we always appreciate the phone calls. You can also reach us at Capital Mortgage Funding throughout the week, 1-800-LOW-RATE, the best mortgage banker. Again, just have these nice conversations. There's no fees up front, no obligation to work with anybody. You just got to run these things through. And I think it's really important to stay in touch with your insurance agent and find out what changes might be coming. Again, just keep your hand on the barometer of things. Always have those contact people. It just makes life a lot easier when you're able to reach out to a professional and get that information. Harry, it's tax season. Harry knows a couple thousand CPAs around the area.
I do.
A couple might be listening. Harry, I think the interest deduction still up to $750,000. Now, many families took the standard deduction, but I think things have changed over the last year. And sit down with that CPA if you haven't yet. Again, April 15th will be lurking. You can always do the extension. But other things, if you're thinking about buying a house and you're self-employed, how important it is to get maybe that proper, get your income tax return done, Missy, if you might want to buy a house, get that tax return done because, again, the amount of income that you're going to show is very important if you're self-employed. Right. We still get those phone calls, Harry, and I want to know if all the CPAs are sharing this with their 1099 and self-employed borrowers.
They are.
Are they sharing, hey, we're here, you hire your CPA to reduce your tax liability, Harry, but you get these write-offs.
Well, the write-offs are, it depends on, your Schedule C, and I'm not going to get into that. I'm not a CPA. I don't play one on the radio. The bottom line is that there are very few deductions that you can take now. Home mortgage interest is one of them, and your property taxes up to $10,000 is another one. And, that's why home ownership, you can't write off rent. I mean, unless it's for a business, but you can't write off, if you're renting an apartment right now or a house, you're not going to be able to write off your rent. Now, there might be some expense if you have a home office there and things of that nature, but again, that's a little bit a different conversation. But home ownership, you still have up to $750,000 that you can take, and you can also take your property deduction, your property tax deductions. So again, there are benefits to it. We have very, very few write-offs now. Again, get with your tax preparer. If it's a CPA, fine. But again, April 15th is the deadline. And even if you file an extension, I have to do my friends a favor.
Yes.
Even if you file an extension, that doesn't mean you don't pay your tax, the money that you owe on that day.
Right.
It just means you don't file your return. But you have to pay some money. If you owe money, you have to pay the money. If not, you're making another call to a different.
That's another lawyer or something you need.
Right. But the
CPAs are predicting that more and more families this year, 2024, so they complete their 2024 taxes in 2025, you're completing them. Because the interest rate was higher, there might be a little bit more itemization going on. Again, you'll consult with the professionals on that, but get it done sooner than later. We always give a couple reminders out there.
Yeah, please.
Buyer beware, seller beware, those kind of things. Yeah. If you bought a house.
I'm going to go home and file my taxes.
There you go.
You're doing the extension? You're going to get it done?
Someone's
done. Get it done. I'm going to get it done. 248-539-9797. A couple other things about that. If your lifestyle changed, so if you were thinking about buying a house last year, we've had some of these clients, and they didn't get a house. 4 or 5 offers weren't accepted. They didn't have the extra money. It was getting priced out of their price range. If your lifestyle changed, if you were a W-2 employee and now you're self-employed, that's a big hiccup, okay? And if you just took a new job where your base salary is X, you get bonuses, you get commission, but you just started the job. You can't use that income. So, so important to get with these experienced real estate agents, lenders, everyone who's in a professional industry. You got to work with the experienced folks.
Yeah, so trends coming up for spring. What are you guys seeing? Quick, we got about a couple more minutes, but tell us what you're seeing for coming up. Anything different, anything new compared to the last couple of years?
I mean, as a whole, the last 3 years, again, it's just, the homes that are coming out of the market, if they've been well maintained and updated, they're going
quick, right?
Yeah, they're going quickly with multiple offers. Again, prices are going up about 5% every year. We've seen that consistently for the last 3 or 4 years. And then we've also, if you're a standard home, not many updates, but well maintained, you should be selling at the price that you're listed for if you have a great agent who is listing your house correctly in price.
Yeah, so we can expect more of that. We can expect more multiple offers, multiple bid situations. And it's not always highest and best, is it? I mean, there's got to be some things. If you're allowing somebody to stay in the house for a longer period of time, there's all other things that come with that.
Terms are always important as well.
Absolutely.
Not just price.
There you go. Harv, are we done?
Do I hear the music, Paul?
Is that it, Paul?
Paul's trying to get out of here. He's
look
running
at
out. He's got somewhere to go.
Miami Heat, Paul. There you go.
All righty. That's been another version of the Hardcore Mortgage Real Estate Business Show. I want to thank you guys. Melissa Rudin, Shelly Dettore.
Thank you.
Guys are
Thank
great.
you.
National
Lots of
Realty.
fun.
Call National Realty. You can find these guys anywhere. You can punch in their names. You can call us at Capital Mortgage, 1-800-LOW-RATE. We'll set you up with all the great agents here in Southeast Michigan. Make home ownership part of your plans for 2025 here.
Thank you, Paul, for producing our show today. It was a great show. We appreciate you.
All right, keep it here on 97.1 The Ticket. Got sports all day long. We'll see you next Saturday.